I'm Kate Lehman and this is the Week in Forex. Today we'll take a look at some of last week's market highlights. The global equity markets were marginally lower and the dollar enjoyed a little reprieve from the heavy selling pressure it's been under so far. Gold continued to make new highs, while oil held steadily below $80 a barrel. In the US, the retail sales beat analyst expectations. For a closer look at the markets, we're joined by foreign exchange analyst John Gibbons. Hello and welcome, John. Let's have a look at gold for a moment, as it's capturing all the headlines. What is happening with this commodity?
Well, Kate, this gold rally reminds me of the oil rally we saw back in July of 2008. Oil hit $146.50 a barrel, and every analyst was predicting $200 a barrel, even up to $500 a barrel. And we may get there someday, but timing is everything. Shortly after that high, oil dropped some 67% down to $46 a barrel.
So do you expect the same thing to happen with gold?
I believe gold will remain bid. However, this current gold rush is too fast. So from a technician's perspective, we do expect to see a retrace, though not near as drastic as that with oil.
Gold is obviously quoted in dollars, so a stronger dollar means a lower price for gold. How much do you read into the US TIC flows, which frankly surprised the markets?
The market was looking for a print of $30 billion, and it published at $40.7 billion. Whether the figure gets revised down next month or not, it still tells you that US assets are in demand and foreign capital is pouring in for them. Retail sales also printed better than anticipated in the US at 1.4% versus expectations of 0.9%. These numbers are being closely watched by traders. With such high unemployment, the fear is that the consumer spending will slow drastically, possibly so drastically that it derails our fragile recovery.
The currency markets ended the week quite mixed, with the dollar gaining against the G10. Is this a sign of things to come?
The dollar is still reacting to equity market strengths and weakness. The retail sales print was positive. Consequently, equities rallied and the dollar sold off. Later in the week, you had Federal Chairman Ben Bernanke speak out in favor of a strong dollar, as well as housing starts and building permits coming lower than expected. Couple that with traders taking some P&L on risk aversion, and you have a quick dollar rally.
The Forex markets seem to be trading in a range. Why isn't the dollar making new lows?
FX markets are at a critical support and resistance levels, and I do not believe there's enough momentum coming into year-end with thin trading and traders locking in P&L to push the dollar much further, at least for the near term.
What do you anticipate for the week ahead then?
There are a number of holidays this week, so trading will be on the lighter side. However, there are a number of key economic data releases due out. In Canada, you have retail sales due to publish on Monday. On the UK, Eurozone, and US, GDP figures are set to print. In the US, new and existing home sale and consumer confidence numbers will be out.
It certainly seems like the potential for a volatile week in the markets. Jonathan Gibbons, thank you very much. Until next week, I'm Kate Lehman, and this was the Week in Forex, brought to you by UFXBank.